Colin Powell wrapped up his interest rate FOMC meeting. Everything seems to look good. Inflation is coming down. The reports were all good. The question and answers seem like everything's going in the right direction. And then I noticed something.
That continues to be the case.
Victoria. Hi, Victoria Guido with Politico. On the labor market, I was wondering, how worried are you all about unemployment rising to the point where it triggers the SOM rule? And would that potentially affect how quickly you cut rates?
So I would just say that the question really is one of, are we worried about a sharper downturn in the labor market? So, and the answer is we're watching really carefully for that. We're aware of that rule, which is really I would call it a statistical thing that has happened through history. A statistical regularity is what I'd call it. It's not like an economic rule where it's telling you something must happen. So, again, what do we see? What are our eyes telling us? We look at all the things we're seeing, and what it looks like is a normalizing labor market. Again, job creation at a pretty decent level, wages moving up at a strong level, but coming down gradually. Job vacancies have come down, but they're still high by historical standards. So, I've been through some of the data already, but what we think we're seeing is a normalizing labor market. And we're watching carefully to see if it turns out to be more. If it starts to show signs that it's more than that, then we're well positioned to respond.
Is there a reason to think that the labor market might behave differently this time than it has historically?
I think, history doesn't repeat itself. It rhymes. I think that statement is very true about the economy. You never assume it's going to be just the same. An example would be, is there a trend increase in the level of vacancies?
Now, in that video, two things I noticed. First is the SOM rule, which they just brushed over. Oh yeah, we know of that indicator. Yeah, funky, cool. But most people didn't quite understand what that meant. And secondly, did you see how worried he was and the way and how long it took for him to answer that question? You saw him puckering up when she asked that, because, see, they're not the only intelligent people in the room. There are other people who know exactly what's going on. But let's get to the SOM rule. So, what is the SOM rule? Basically, the 3-month average unemployment rate rises 0.5 percentage point above the low of the previous 12 months. It indicates a recession, as you can see here on the chart. Now, what is that saying? It's saying that once it rises 0.5 percent higher than the moving average of the 3 months, it means that there is a runaway unemployment rate. And an runaway unemployment rate means a recession. Now, the Fed is trying to do a soft landing. Every single Fed meeting, unemployment has been going up. And I have been stating throughout my videos, you can watch on TikTok, and now I'm going on to YouTube, that what's behind the unemployment rates that they've been stating is being weak. It's been weakness. It's been things that show that it's strong, but in actual fact it isn't. And I believe that this Friday, that unemployment is going to be higher than expected. And then this rule, by not only the way he reacted, but by the data I've been looking at, is going to come into fruition. Oh dear. Oh dearie, 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 dearie. All risk assets are going to have a hell of a time on Friday. That is my prediction.
It's getting softer. It's not as hot anymore as it used to be.
All right, and Ben, so one thing in your note that you mentioned today was the SOM rule. I know it's named after Claudia Somm, the economist. So educate our audience on what that means and what you're paying attention to there.
Yeah, the idea is and it's great work that she's done, and well-recognized work. So it's looking at the 3-month average of the unemployment rate and then comparing that to the 3-month average of the trough of the unemployment rate. And if that difference is 0.5% or more, that has has been historically the trigger of like the recession would start to unfold from there. And we all know that how does a recession really happen in the United States? Is the unemployment rate going up quite quickly. And that's really when you can say that the economy will be in a recession. So the rule is not triggered today yet, but we're getting a lot closer than we have been before. And I think it takes another one or two of these type of job reports to do trigger that rule. That isn't to say that you're immediately being in a recession, but you're getting then closer to an environment where there's just more and more people are unemployed, maybe longer unemployed, and it starts to slow down everything in the economy. So we have to watch this metric. It's been fairly precision in terms of its forecasts, but I won't say that right now it doesn't seem to be we haven't triggered the rule yet. So I think too why markets are somewhat mixed on the report, probably paying attention to metrics like this.
Another indication why I think that we are closer to the SARM rule and we're closer to a recession, and I believe that the unemployment rate on Friday is going to be worse than we expect, is if we look at the manufacturing data. Manufacturing is down. It's really down. Like 46 is bad. And more importantly, and this is what gives me the confidence to see what's going to happen tomorrow, is that is the unemployment rate in manufacturing. 43.4 is pretty much as low as this table gets. That is just so bad, and it's usually a key indicator that a recession is on the line. So here we are, gentlemen. It looks like the Fed is taking their time. They might be actually letting a recession happen so they can aggressively cut interest rates. But the failure of taking time will be at the expense of all risk assets. So if you're in crypto, if you're in risk assets, be forewarned, as I am telling you that this could be a nuclear event for all risk assets. Anyway, I'm Alvarez, a 7-figure crypto investor. Like, follow, share. This is a new channel, so every single like helps, and I will catch you guys later. Peace.